Earlier this week, Tesla exacerbated an already nervous market mood with the announcement that it was no longer accepting the cryptocurrency as payment for its products. As usual, the crypto market focused on the immediate narrative. If Elon Musk says that Bitcoin, BTC, minus 6.22%, is bad for the environment, other large investors will probably worry about public scrutiny and decide to sell, right? The expectations game, which consists of guessing what others think you're thinking, then makes reducing positions the sensible thing to do, regardless of fundamentals. While this may be Elon Musk speaking before thinking, or it may be his board and/or executives bowing to outside pressure, it's worth taking a step back to look at the probable motivation and strategy behind the move, as well as its hopeful outcome. First, let's look at why the Tesla statement was not that significant, and then we'll look at why it does actually have meaning. Against the wind, Tesla announced that it would start accepting Bitcoin as payment back in February, at the same time as it announced a $1.5 billion investment in the asset. Even back then, the payment option felt like a PR stunt. If Bitcoin is a reserve asset, a hedge against fiat debasement, then why would users want to use it as a payment token? Many insist that Bitcoin is useless as a payment token, given its high fees and slow confirmation times. This overlooks the fact that in many areas of the world, it is still a better option than existing systems. And Bitcoin-based payment rails are spreading. However, for the majority of Tesla's target audience, Bitcoin is unlikely to ever be a better payment option than straightforward bank transfers or platinum credit cards. And Tesla's signaling that Bitcoin as a good reserve asset and a useful payment method presents an intellectual disconnect. If Bitcoin is worth holding as a fiat debasement hedge, why would users part with it? Especially when, if they needed to raise funds for a Tesla and had lots of Bitcoin sitting idle, they could use the cryptocurrency as collateral for a fiat loan, which could then go toward a shiny new car. In other words, the number of Tesla customers excited about paying with Bitcoin was always going to be small to non-existent. Removing that option feels like another PR stunt, and a ham-fisted one at that. The economic impact of removing something hardly anyone would want anyway is negligible, both for Tesla and for the demand for Bitcoin. The reason given for the decision was the rapidly increasing use of fossil fuels for Bitcoin mining and transactions. This is factually false. More detailed information on this is not hard to find. And Tesla confirmed that it is not selling its current stake in BTC. So, with this move, Tesla comes across as one, lazy and irresponsible on the research side. Tesla shareholders have every right to wonder why the company is just finding out about the energy consumption mix now, and two, hypocritical. Why is supposedly contaminating BTC acceptable for the balance sheet, but not as a possible, but unlikely, convenience to users? As for credibility, when Twitter co-founder Jack Dorsey tweeted last month that Bitcoin incentivizes green energy, Elon Musk responded, "True. And, you have a potential breach of fiduciary duty, something Elon Musk is no stranger to." With this tweet, the price of BTC dropped almost 8% within 3 hours, producing a significant slump in the market value of the firm's Bitcoin holdings. This will not impact the balance sheet, which values Bitcoin at the lower of cost or market value. Elon Musk may act irresponsibly at times, which is a risk that Tesla shareholders know about and accept. But he is far from stupid. So what is really going on here? A place in the sun. I am not a mind reader and have no insider knowledge of the thought process behind publishing that statement. But I don't think it was an impetuous mistake. Tesla's mission, according to the headline on the About section of its website, is to accelerate the world's transition to sustainable energy. Last week, Tesla entered the S&P 500 ESG index, up 9.8% year-to-date at time of writing, slightly ahead of the S&P 500, which selects stocks based on environmental, social and corporate governance scores relative to others in the same industry group. And earlier this week, with uncanny timing, Reuters reported that Tesla was seeking entry into the multi-billion-dollar U.S. renewable fuel credit market. So Tesla has invested heavily in sustainable energy and it has invested heavily in Bitcoin. Might we soon see Tesla-branded green Bitcoin mining? With the Bitcoin payment statement, Musk is kicking the Bitcoin is bad for the environment conversation up a notch. The flood of counter-arguments his tweet received is just the beginning. But with Musk's tweet and the subsequent price fall, the community is no doubt becoming even more acutely aware that tweeting is not enough. Writing reports is not enough. This conversation needs to escalate to policy. A rising tide, what does that mean? It could range from fiscal incentives to spend more on energy R&D to outright operational bans unless the energy mix meets certain criteria. There's also the tool of energy subsidy tweaks. Incentives are generally good, bans not so much, but the objective would be to nudge mining firms along the energy transformation curve. Many have been doing this anyway. And officials are waking up to the potential to attract cryptocurrency-related businesses to their areas. In many cases, Bitcoin mining can boost activity in struggling economies that have good natural resources but low infrastructure spend. Tough times lie ahead for officials and regulators when it comes to harnessing the opportunity in crypto. Many of them are still relatively low on the learning curve. We all know that environmental questions are complicated, the problems are often misunderstood, and simple fixes are anything but. Throw into the mix the still controversial concept of decentralized self-sovereign currencies, and you have the considerable challenge of identifying social priorities, let alone protecting them. But the more Bitcoin mining gets talked about at a policy level, the more acceptable it becomes as an industrial activity. Politicians will come to realize that bans will merely send the activity elsewhere. The more the potential is understood, the greater the incentive for politicians to come up with solutions that help remove the contamination stigma. And the greater the mining industry involvement in renewable energy initiatives, the cleaner its image will become, removing a potentially significant barrier to more widespread investment in the Bitcoin market. That's how the Tesla decision ends up helping the Bitcoin price, by escalating a much-needed conversation that will end up removing investment barriers and encouraging further development and exploration of the role Bitcoin can play in many fundamental areas of society.